Good morning. Is everybody here for the Paul Neufeld appeal?
I'm Paul Neufeld.
All right. Let me go on the record. We're now on the record in the Office of Tax Appeals oral hearing for the appeal of Paul Neufeld. Case ID is 1808-3558. We are in Sacramento, California. The date is Tuesday, November 19th, and the time is approximately 10 a.m. November 19th, 2019, obviously. My name is Jeff Njija. I'm the lead administrative law judge for this hearing. My fellow co-panelists today are Andrew Quee and Amanda Vasig. And Mr. Neufeld, could you please identify yourself for the record?
My name is Paul Neufeld.
And for CDTFA, please identify yourselves for the record.
Jared Noble.
You've got to speak into the microphone, please. Thank you.
Jared Noble.
Monica Silva.
Hanks.
All right. And as the parties agreed during our pre-hearing conference in this matter, this appeal involves one issue, which is whether appellant is personally liable under Revenue and Taxation Code, Section 6829, for the unpaid tax liabilities of California Retreaders, Inc. And during our pre-hearing conference, the parties agreed to the admission into evidence of appellants, Exhibits 1 through 2. Those had been attached to your briefs. That's what you identified. And you didn't have anything further. Is that still correct?
Correct.
All right. And CDTFA had Exhibits A through D. Neither party had any objection to the admission of any of the exhibits, but you didn't object to A through D of CDTFA's exhibits. If that's still correct, I will hereby admit those exhibits into the record. And based on the pre-hearing conference, it's my understanding that Mr. Neufeld will testify as a witness today on his own behalf, and CDTFA has no witnesses. And we agreed during the pre-hearing conference, we will begin with appellant's testimony and argument, which should not exceed 15 minutes. We don't have to be super strict, but, and CDTFA will then be allowed to ask questions if they wish, as would the panel of judges. CDTFA will then make their presentation, not to exceed 15 minutes, and the co-panelists will be allowed to ask questions if they wish. And with that, I can swear you in, and then we get started. Would you please stand and raise your right hand? Do you promise to solemnly swear or affirm to tell the truth, the whole truth, and nothing but the truth?
Yes.
All right, thank you. And Mr. Neufeld, when you're ready, go ahead and begin. You just have to tell your story.
Thank you for this opportunity. This has been a heavy burden for quite a while on my family. In 2005, I was approached by Matt Shetler, whose father owned California Retreader. Well, it wasn't called that. It was called Shetler Tire at the time, and said his dad had bladder cancer and wanted to know, because the son was going to take over the business, wanted to know if I wanted to buy in. I was a very successful salesperson for that company. I had done very well. I was very blessed. My wife and I talked about it, and we saw the opportunity to, because that business had about 100 employees at the time, and we thought, my background as a youth pastor and as a people person, maybe some of you guys want to know, my email's Freddy67. In the 90s when email came out, I was the mascot for the Fresno Falcons. Just to give you a background of who I am, a goofy, that's what I love people, I love kids. So my wife and I talked about it, and we thought it might be a wonderful opportunity for us to make a difference in some people's lives, to give people that didn't always have a chance to have a job. So we borrowed the maximum money, $250,000 on my house, and I had almost $300,000 that I'd managed to save up over my lifetime, and we borrowed $100,000 from my mother-in-law. We put that all into the business. Biggest mistake of my life, not knowing what I was getting into. I'm not college educated, but a lot of people aren't, but I do know how to work. I get up every morning at 4 or 5 o'clock, and I know how to physically work. This mess that I got into with this group of folks has cost me my health. It's cost me everything. In 2014, my home went up for auction right before Christmas. It's hard to look your kids and your wife in the face and say, yeah, your dad screwed up by making some real bad business decisions, but you know what? It all's worked out. Life goes on, and we have American problems here in America. We don't have real problems in this country. So buying into the Shetler company Matt, who was my partner, and there's another partner too named Tom Howard who also bought in, who was also screwed out of his $250,000 that he put into the business. And he wouldn't have known any of this stuff. He was kind of a silent partner. He was a farmer, but he got ripped off just like I did. Matt agreed that my wife was going to work for him because my wife was worked in offices, and she was going to help Matt out run the retread shop. I was going to handle the sales department and all the sales because I'm a sales guy. That's what I do. I'll help your tax issue out. You guys probably are owed that money. I have no way. I don't know how to calculate sales tax. I've never done that. I don't understand how that gets done. That's not what I do. And I'm sure it's owed to you. In 2009, we started having, in 8 and 9, when the economy went bad and things started getting really horrible, we started having major money problems with the company. We had blown through the money I had put in the company. Mr. Shetler didn't have to put any money in because it was his dad's company. Prior to that, I'll tell you a little bit of what else I did. I was able to get 52 at-risk youth or former felons back to work in my company, in that company, California Retreaders, and I came and spoke to your assembly twice about giving people a second chance. And I brought 2 of the guys up here with me, guys that had never had a suit, went out, bought them a suit, brought them up here, just to show other businesses and anybody in here that owns a business, felons will make some of the best employees you could ever dream of having because nobody will give them a freaking chance. Nobody gives them a chance. And that was my goal. And 52, and just to tell you what it's like to have a woman come into your office that's 40 years old and show you her driver's license for the first time because she's lived in a halfway house her whole life and she's bawling. I mean, that's what this was all about for me, was making a difference. That's all I cared about. When we bought in, I had no idea it was going to be this crazy, but what I didn't know is that when I bought in, that he had his wife working for the company she didn't even know where the place was, his 2 kids, his brother worked for the company, his kids worked for the company. They're all making $8,000, $10,000 a month, which is ridiculous. So I start throwing a fit, but I'm only a 50% owner. It's been his company. We started having major money problems. We can't pay our bills. We bounce a whole payroll. You got 80 people on payroll and you bounce a payroll. That was one of the worst days of my life when I found that out and had to borrow money on my credit cards and everything I could to get these people paid. I don't know why the taxes weren't being paid, except that there was usually not money to pay people, or PG&E, where we were making payments to PG&E, and I became involved once everything started going haywire because my name's attached to everything. I'm getting phone calls now from the gasoline company, from people going, hey, are you guys going to pay us? We can't sell you your rubber. We can't do this. We owed Michelin $3 million at that point. In the Exhibit C of the main paperwork, it says Paul Neufeld was the vice president, secretary, CFO, and director of this small, closely held corporation. We were doing almost $1 million a month in business. To me, that's not a small, maybe that is small, I don't know. $1 million a month is not a small, closely held corporation. It was closely held by the Shetler family, which Mr. Shetler still owns half of the other side of the Shetler business. I signed checks. People knew who I was. Absolutely, I had the authority to do that. But I didn't have the authority to go, hey, I'm not paying people this week or not going to pay the rent. I wasn't doing all that. And to pay the tax liability. You know, the government should be the first to get paid, but I think people look at that as, oh, they'll be all right. So in 2009, I went to Michelin and said, we have some serious problems here. Mr. Shetler and I were not on speaking terms at that point. It was a bad deal. And I told Michelin, who owned the rights, we had a retread plant, truck tires. You bring an old truck tire in, they grind it down, they put a new one on it. The environmental, you can't open one of those right now. Getting one open because the environmental responsibility is so bad and so big, it's like opening a waste plant. You just can't go do it. So we had one of only 2 in the state of California that is what this retread plant was. Very difficult thing. If you started it now, it'd probably be a 5-year process. It'd probably be $5 million to get the permits and everything to get it done. It's just not something that overnight can be done. Michelin knew all along that I found out afterwards that Mr. Shetler and I were not going to be able to keep this company going. Neither one of us, you're doing $10 million a year and you have $0 in your bank account to fund, you have no cash. And then most of our business was not a cash business anyways. What we would bill customers, the mission would give us credits back on our rubber that was purchased. So it was a very cash poor business. When things went bad and we went to Michelin, I went to Michelin and said, hey, I want out. I need to get out of this thing. They said, hey, we got guys that we want to bring in, Jack's Tire and Oil out of Utah, which is a very large, one of their largest retreaders in the country. They wanted to bring them in and buy the corporation. So they brought Jack's Tire in, and because Mr. Shetler and I were not speaking, and I started raising some questions about the illegality of what I felt they were doing when they purchased this thing. If you look at the purchase agreements that's in the documents, you'll see that in the escrow, they purchased a $10 million company for $55,000. And nobody finds that weird. And I'm flabbergasted at that. They paid $55,000 into escrow, was all they paid for a $10 million company. Trucks, the building was 62,000 square feet, which was paid for separate. That wasn't part of this purchase. That was paid for separate. The building was full of equipment, 15 computers. It's all listed out on what they paid for in the escrow. $55,000? And then so the argument from the tax board was, hey, Mr. Paul, what makes you think they only paid $55,000 for this business? What makes you think that they would have paid another dime of your, because they were supposed to take care of the tax liability. It was in the notes. The tax liability was in the escrow instructions. It's in your paperwork that you have from the Office of Tax Appeals here, that it was in there. And then during the process of selling the business, it was a room like this, and there are more lawyers than there are here now in that room, and we're going around this table signing, I don't know how many documents. Michelin was there, the banks were there. It was insane. And then all of a sudden it's brought to my attention, hey, they took out the tax, the $40,000 that you owe the state. They took it out. It's not in there. And it was in there, and you'll see that in the documents. It was in there, and then the day of, they take it out. Stop the presses. That's when I went and talked to Andrew Kochi, who was your guy in Fresno, who was a wonderful man. And what I understood from him, and call me naive because I didn't get it in writing, and I've read his responses, but when you have a company like a retread company that's operating in the same building, doing the exact same thing with the exact same employees, they have to get a tax use permit to continue doing that business. And Andrew said they would not give them a tax permit or a use permit unless they paid that tax that was due, which was supposed to be in the escrow. But then now I found out, well, that wasn't in writing. That's kind of not what he said, but that's what I understood him to say when I left that office was, Ms. Neufeld, they are not going to be able to continue that business until they satisfy this judgment, this need. I would have just dropped my pen and sat in the corner, and with the amount of money that was being charged per hour for signing those documents at that time, they would have had to hand wrote that in and paid that money if I would have thought that this would have done this to me and my family since then. There's over on that escrow, there's over $200,000 of assets just on that one page of escrow that they paid $55,000 for. I mean, you got a truck that was a big semi-truck that's 3 years old. You've got pallet jacks. You've got these things called envelopes. There's over 300 of them that cost the company over $100 a piece. And somehow they get away with paying $55,000. Because when they started doing this stuff that they didn't want to pay the taxes, and they started narrowing the scope of what they wanted to pay for on paper, instead of, they took over the AR, they took over the AP, they took over everything at that point. Prior to, this was in July, and the business wasn't sold until September. Prior to that, when all this stuff's going, and I'm the trunk monkey. I don't know if you've ever seen a trunk monkey commercial, but he pops out of the trunk and raises Cain when something goes wrong on his daughter's date. With the boy puts his arm around her, the monkey tops out, and that was me. I was the trunk monkey. I was raising all this questions about just morals. I mean, it was morally wrong what was being done, and all of a sudden, okay, you're the bad guy. Put it all on him. I had to sign over, and it's in there, I had to sign over all, in July of 2010, I signed over all my 50% shares of the company. I signed over to Matt Shetler because they only wanted to deal with Matt Shetler. They would not deal with me because I was causing them too many headaches. Now, during that time is when they negotiated all this stuff to pay $55,000 for a company that was doing $10 million a year. I didn't have any power to do that because they had me. They had also in there, you'll see where they basically threatened me to play ball. If I didn't play ball with them, they were going to make it to where I'd never have a job in the tire industry again, which good riddance anyways. I didn't, at that time, I was terrified. I had lost everything and I needed a job. I had no income, nothing. So all these I want to go through this, and I know I apologize for bouncing over. I'm nervous, and I have chemo brain too. Since 2014, I've come down with cancer. I've been at Stanford 13 times for major surgeries, and so my brain does not work like it used to work, and I apologize. I'm doing my best. But if you go to the responsible party under the documents that were provided by the office, all these exhibits, Exhibit C, if it says Paul Neufeld was an agent. Yeah, my name was under Matt Shetler's. He was the primary agent. My name, somehow, the office came to think that I was the president, but it was like the narrative was decided because I was the one that was the pain in the butt and the contact person. There was only one phone call, according to all the evidence from the office, where they called Matt Shetler on April 23rd, 2013, they called him and asked him, hey, did you have anything to do with the tax stuff? And he said, nope, that was Paul's fault. Well, of course Paul's fault. Paul left. He's not there anymore. You always blame it on the guy that left. That's the easy answer. I signed, yes, absolutely signed checks. Matt Shetler said that he didn't ever sign checks, told that to the office. I forget who was talking to him. A complete lie. He signed checks.
By office, you mean
yes,
CDTFA? Okay.
Yes, side of tape. Sorry, guys. I don't. Every document that's listed there, yes, it has most of them have my name on them, that evidence that they use. They were all have Matt Shetler as the primary contact, the primary person. I worked with Matt. You got my name on this because I got involved with trying to get you guys paid. That was my whole goal, was trying to get you guys paid. He was a 50% partner, but it was his company. It was his dad's company. It's still his dad's company. Then, to show you the fraud that I believe they were perpetuating during this, after all this is done, I provided a copy of a bank statement. The day after the sale was done, they wrote Matt a check for $125,000. I got nothing because I was the bad guy. I was trying to get them to pay their bills. They got this guy to go along, write all this stuff, kept his mouth shut about, there's a thing goes on in the tire industry, and I'd love to tell somebody off camera of how the tire industry does not pay taxes on top. There's a thing called excise tax, federal excise tax on everything, right? But they get around it, and they get around it very simply, and it's disgusting, and it's a lot of money, and I'll be happy to share that with anybody when the cameras are off. I'd love to tell you where to look because it is rampant in the tire industry. This stuff that went on, these exhibits that all have Mr. Shetler's name on it, just like my name, and I knew about this at some point. Yes, I did know about it. I was trying to handle the sales, be the retail guy. Mr. Shetler, one of the things that's funny is some of the examples of the bills, the checks that were written or paid are Schoner, and there's a Elm Tire Company. Those are both still Mr. Shetler's business partners on the other side, and I find that humorous that those were examples that were given to be used. I had check signing authority. I was an officer in the corporation. I knew about the tax liability. I'll help them out right now, and they're probably sitting over there going, you moron for saying that, but it's a fact. I have nothing to hide. What I do not understand is why I'm the only one sitting here. Why is this put on me? Right now, I live on Social Security 100% because of my illness. I'm disabled. I live on $2,300 a month. I don't know what to tell you guys. I have nothing. My home went to auction. My 90-year-old mother-in-law, because we took all her money, now lives with us. My wife takes care of her full-time. I've never not paid a frickin' bill in my life, and I had to go through bankruptcy because it's in this room with a bunch of people. You know how embarrassing that is? I've been working since I was 14 years old. All I try to do is make a difference in this world, make it a better place for people. I tried to hire the right people. The chief of police in Fresno became a good friend of mine because I was putting bad guys to work. I had Norteños working next to Serenos with a bulldog standing in the middle of them. Name another place. It just doesn't happen. But if you treat them right and doggone it, you guys are owed the money. I don't know what to tell you. It should have been paid in the escrow. I thought it was going to get paid. I did everything I could to get you guys paid in the escrow, and it didn't get paid, and I believe it was fraudulent, and they had people going along with it, and why else would they have wrote a guy a $125,000 check when it was done after the escrow was closed? It is, anyways, I don't have much to say, guys. I don't think I should be sitting here by myself, and I'm sorry they've had to work so much on this, because I guarantee they've worked more than the 40 grand that was owed has been spent in time. Money has been spent on this crap that should have been paid, but I don't know why I'm here alone, and I don't know how I'm going to pay you. I don't have that ability.
I know it's an unfortunate set of circumstances, and nobody in this room likes this particular provision of law, but we've got to enforce it when it
Yes,
pops
sir.
up.
I
So,
get it.
I have a question or two at the end. I'd like them to be able to address why you're the only one sitting there now. I also know there's confidentiality constraints that would preclude them from telling us who else they may have gone after.
Okay.
I'm kind of answering the question I would ask them. Section 6829 imposes liability on anybody as to whom all four elements are met, which means not necessarily the most responsible person, but anybody who meets that threshold. Could be more than one, could be all of them. So, okay, but that concludes your presentation.
Yes,
Questions from my panel?
Yeah, I did have one question. So, as I understand it, the sales tax was collected on the sales, and I'm just wondering why that wasn't remitted to the state at the time it was collected from the customers.
I didn't do any of the accounting. I don't know.
Okay, so you didn't have authority, or you just didn't know?
I didn't have, that was Matt's part of the business. I was in the sales part of the business. I do not know. I believe probably because they felt they didn't have the money to pay.
Okay.
They were short on everything.
Okay, thank you.
DFA, would you like to begin your presentation?
California Retreaders operated Shetler Tire of Fresno. At the time the business terminated, California Retreaders had unpaid tax liabilities. An appellant was held personally responsible for those tax liabilities, plus accrued interest and penalties pursuant to Revenue and Taxation Code 6829. I know that he kind of indicated that he conceded some of the elements with respect to 6829, but because CDTFA has the affirmative burden to establish those, I'm going to go through them as briefly as possible. Section 6829 provides that a person may be held personally liable for the unpaid sales and use tax liabilities of a corporation so long as the following four elements are satisfied. The business operations must have terminated. The corporation must have collected sales tax reimbursement. The person must have been responsible for the sales and use tax matters of the corporation, and the person's failure to pay must have been willful. With respect to termination, pursuant to an asset purchase agreement, Exhibit A, pages 26 through 45, California Retreaders sold all assets as of September 24th, 2010. Accordingly, the business operations of the corporation terminated on that date. With regard to whether California Retreaders collected tax reimbursement on its sales of tangible personal property, the audit report for the period ending September 2008, Exhibit C, page 37, provides that audit staff verified that the corporation collected tax reimbursement. This was also confirmed in a responsible questionnaire completed by appellant, Exhibit C, page 61. Responsible person. As for element 3, a responsible person means any person having control or supervision of, or who is charged with the responsibility for the filing of returns or payment of tax, or who had a duty to act for the corporation in complying with any provision of the sales and use tax law when the taxes became due. According to CDTFA's Automated Compliance Management System, ACMS, in a note dated April 23, 2013, which is Exhibit C, pages 47 through 49, appellant confirmed that he was a person responsible for the sales and use tax matters of the corporation. In addition, the seller's permit application dated November 2006, Exhibit C, pages 54 through 55, list appellant as the Vice President of California Retreaders. And in a letter dated July 28, 2008, Exhibit C, page 73, appellant identified himself as the CEO of California Retreaders. Appellant also signed a voluntary petition for bankruptcy as president on March 14, 2011, which can be found in Exhibit C, page 225. In the July 28, 2008 letter that appellant signed as CEO that I just referred to, he states that he is attempting to make payments towards the corporation's sales and use tax liabilities. In addition, other ACMS notes, which can be found in Exhibit C, pages 238 through 245, indicates that there were numerous contacts with appellant regarding the unpaid tax liabilities of California Retreaders throughout the periods at issue. Appellant spoke with the department on July 29, 2008, October 15, 2009, and September 22, 2010 regarding the corporation's sales and use tax liabilities. While we are sympathetic with the position he was placed in with his partners, these contacts with CDTFA during the liability periods are evidence that appellant was directly involved with the sales and use tax matter compliance of California Retreaders and that he was a person responsible for the filing of returns and the payment of tax within the meaning of Section 6829. As for the fourth element, willfulness, a person's failure to pay is considered willful if the person had knowledge that the taxes were not being paid, had the authority to pay the taxes, but failed to do so. As to knowledge, the assignment contact history for the audit liability, Exhibit C, page 39, shows that the audit findings were discussed with appellant and his wife on July 22, 2009. Accordingly, appellant knew of the audit liability no later than this date. With respect to the non-remittance returns, ACMS contacts show that appellant knew that the corporation consistently filed returns without timely paying the tax the corporation reported as due. An ACMS note dated July 29, 2008, which is Exhibit C, pages 238 through 239, shows that appellant spoke with the department regarding outstanding sales and use tax liabilities totaling $145,697. On October 15, 2009, Exhibit C, pages 240 through 241, appellant again spoke with the department regarding an outstanding balance of $153,931. During this call, the department advised appellant that the return for the third quarter of 2009 was due, and appellant informed the department that there was no way the return would be filed with full remittance. On September 22, 2010, Exhibit C, page 243 through 245, appellant again spoke with the department and stated that he knew the corporation was in default with respect to the corporation's sales and use tax liabilities. Appellant's contacts with the department established that he knew the corporation was filing its returns without remitting the tax it reported as due. We also note that appellant has provided no evidence to refute his knowledge and that this was a small, closely held corporation, and at all relevant times appellant was a corporate officer of the company. Appellant's position in the corporation is further evidence that he knew that the corporation was not remitting tax at the time the returns were filed and is consistent with CDTFA's contacts with appellant during the liability periods. Accordingly, the evidence establishes that appellant knew of the unpaid tax liabilities on or about the due date of these returns. As for authority, there is no dispute that appellant had check signing authority to pay the debts of California Retreaders as conceded by appellant during the appeals conference, and again, appellant has provided no evidence to refute that he had this authority. Lastly, as for the ability to pay the taxes, the corporation collected tax reimbursement from its customers, which establishes that the corporation had the funds available to pay its tax liabilities when due, and instead used the tax reimbursement it collected to pay others and not CDTFA. For example, throughout the liability period, payments were made to PG&E, Allied Insurance, and suppliers such as Dave's Tires and Elm Avenue Tire, as shown in Exhibit C, pages 78 through 221. In addition, corporate bank statements for November 2009 through January 29, 2010 show withdrawals of approximately $1,190,000. All of this evidence shows that there were funds available to pay California retreaders' liability, but the funds were used to pay others. Therefore, appellant was willful in his failure to pay the tax liabilities of California retreaders. I want to note that the willfulness prong does not require a finding of any evil motive or nefarious intent. There's no implication there whatsoever. With respect to appellant's assertion that he was orally informed by a CDTFA employee that the purchaser of the business would be the sole liable party and that the department is therefore stopped from collecting for him to the extent he makes this argument. While the law provides for relief under specific instances of written advice, the law does not provide a basis for relieving appellant's liability on oral advice purportedly made by a CDTFA employee. Lastly, with respect to any assertion that the sale of the business was constructed in a manner to reduce paying the corporation's tax liabilities, whether true or not, any conduct during the sale of the business or contract terms between the parties do not form a basis for relief from personal liability. As previously stated, the department has clearly met its burden of proving all elements for imposing personal liability on appellant. There was also some penalties that were passed through in this liability. There was a penalty a finality penalty for the audit period that ended in September 2008. There was a late prepayment penalty for July 2008 and various late quarterly payment penalties, including the fourth quarter of 2008, every quarter in 2009, and the second quarter of 2010. These penalties can be relieved if reasonable cause and circumstances beyond a person's control and in the absence of willful neglect is established. In this case, the person would be California retreaders. Persons seeking relief of the penalties must provide a statement signed under penalty of perjury. Appellant did provide an unsigned statement in which he states that the business was in debt from the moment he bought into the business and that he made concerted efforts to pay the company's bills. However, the election to pay other creditors and bills of the corporation is not a reasonable cause for failing to timely pay the tax liabilities at issue in this appeal. Accordingly, there is no basis to relieve the penalties incurred by California retreaders. However, I want to note that California retreaders did incur a failure to pay by electronic funds transfer of $32.18. This penalty does not have anything to do or relate to a failure to timely pay tax. So the department concedes that this penalty should be removed from the derivative liability. Also, finally, I just note, as set forth in a CDTFA letter dated May 1st, 2018, which is Exhibit A, page 58, we conceded interest from June 1st, 2016 to April 30th, 2018. Otherwise, this appeal should be denied.
That concludes your presentation.
Yes.
Questions from my co-panelists? Hearing none.
No further questions.
All right. I'll give you your opportunity for rebuttal now, and then I have a closing question I'd rather ask. So go ahead, and you can respond to the items that they mentioned.
The knowledge of the tax problem was brought to me at different times. When the audit was done, if you read their own audit thing, it was brought to Linda's attention. It wasn't brought to my attention. I wasn't in the office. I didn't pay the bills. I signed checks when somebody needed to sign them. If Mr. Shetler wasn't around, I signed them. When the tax, I don't know, I got between 100 and 300 phone calls every day, and so I'm running like a chicken with my head cut off, and somebody says, hey, you got to pay these taxes. All right, go yell at the office, pay the stinking taxes. Well, once I got involved, kind of going, wait, what do we owe? Who owes what? Hey, pay these stinking taxes. You start telling them, well, then they don't pay the taxes again. Then I get another phone call. Hey, pay the taxes, guys. What are you doing? I guess I'm the moron that because I got involved, now this all rests on my shoulders. I don't know how to fill out a tax form. That's not what I did. That's not what I do. I don't know how to report quarterly taxes. I know it gets done. When you have two guys, there was three, but two guys primarily running a multi-million-dollar corporation, you have so many positions that have to be filled in that corporation. As an S-corp, you have to have president, vice president, secretary, and this and that. Well, I don't know, they put me down as this, put me down as that, whatever that was, but man, I cleaned the toilets. I did whatever job needed to be done. I was not in the office paying the bills. I get it that it was owed. I did have check signing, but I did not realize that it was this extent until it got to the end when we were selling the business, and then it was such a complete sham that it didn't get handled. I'm, like I said, the trunk monkey. I'm raising Cain trying to get this handled because I didn't have the money. I lost everything I had in this corporation. Everything. I have no retirement. Nothing. If I would have been in the office and I would have known the taxes weren't getting paid to the extent that they weren't getting paid, I would have not, there was a whole bunch of guys that wouldn't have got paid to write you guys a check. I mean, it's pretty easy to write a $40,000 check on a company that's writing checks for $100,000 all the time. It's not a big, don't pay the fuel bill. If the business is going broke, don't pay the accountant. I mean, they don't pay the attorneys, whatever it is. I'm sitting here because I can't afford an attorney. And no disrespect to attorneys, but you guys all have your place and we all need you. But this, all I can do is tell the truth. So all I have to say is that I didn't realize it was what it was. Yes, I was a quote-unquote contact person because I got involved in it, but it wasn't my responsibility just to pay this. This is not what I did. I was the sales guy. And here I am sitting in front of you again, the dummy, trying to tell you guys what happened to make sure you get your money. But anyways, so that's all I got to say.
So my question doesn't necessarily go to the merits of this appeal. Have you contacted CDTFA regarding settlement options? Has he contacted you guys at all? OTA does not do settlement.
Okay.
And the only reason I'm mentioning this, and I'm not in any way indicating merits
I
or
understand.
otherwise, but you're mentioning an inability to pay. Once there's a final liability, that's one of the things they can take into account on a collection side, which has
Sure.
no bearing on
I
what's
get
at
it.
issue here today.
I get it, totally.
Offers and compromise,
Yeah.
once the liability.
Can you guys give him some information on that once the
I will
hearing's?
contact Mr. Neufeld via email and give him.
Appreciate that.
And I'm not meaning to prejudice how we're
Not at
deciding
all.
the case.
No, I get it.
I just
Thank
want to make sure you
Give
have
me some
full
information.
information. Thank
I
you.
appreciate that. Thank you.
Okay, if nobody has any further questions, then, at this point, I will close the record and conclude the hearing. I want to thank each party for coming in today, and following this hearing, my co-panelists and I will discuss the evidence and arguments, and we will issue a written opinion within 100 days. I try to be faster than that.
Thank you.
And with no further questions, that'll do. That'll
Thank you.
conclude the hearing.
Thank all you guys for what you do. I appreciate, in this world of hate that we have towards government and all this craziness in Washington, really, thank you guys. I know everybody gripes about government until we need them, right? But thank you for what you do that gives us the services that we have. I really, as an American, I'm proud of you guys, so thank you.
Take a 5-minute break before the next hearing. So let's call it 10:45.
Hello. That works great. Cool. It's okay. I can lean over and talk on that one.
Can you push it forward more? Push this forward? Also, I can put this right here and talk pretty close as well. I know, but if you push this back. They don't have.
Nice shot.
That's right.
Sorry, Clyde.
It was a thought. Is this one on?
Hello? Yeah. Hello? Hello? Yep, that works. Is everybody ready?
Yes.
Podiums work? All right. Then let's go on the record and get started. We are now on the record in the Office of Tax Appeals oral hearing for the appeal of Newell Window Furnishings. Case ID is 1812-4134. We are in Sacramento, California. The date is Tuesday, November 19th, 2019, and the time is approximately 10:50. My name is Jeff Angija. I'm the lead administrative law judge for this hearing. My fellow co-panelists today are Alberto Rosas and Suzanne Brown. And appellant, can you please identify yourself for the record?
Carly Roberts with Pillsbury for Newell.
Mike Lay with Pillsbury for Newell.
You'll have to speak more clearly into that microphone, I'm sorry.
Mike Lay with Pillsbury for Newell.
Not so much for our benefit, but we've got to get it into the court reporter's equipment. Sure?
Go off the record.
Yeah, let's go off the record.
I didn't realize that was going to be there, so I need to.
Oh, okay.
Go over just a little, so I read from lips.
All right, we'll go back on the record. You got his, all right, so CDTFA, could you introduce yourselves for the record, please?
Chad Backus.
Stephen Smith. And Kevin Hanks.
All right, thank you. And this appeal involves one procedural issue, which is whether appellant timely filed its appeal with the Office of Tax Appeals. And during our pre-hearing conference, the parties agreed to the admission into evidence of appellant's Exhibits 1 through 9 and CDTFA's Exhibits A and B. Neither party had any objection at that time to the admission of those exhibits into the record. Is that still the case?
Yes.
All right, then I hereby admit those exhibits into evidence. And based on our pre-hearing conference, it's my understanding that neither party has any witnesses today. That's still the case? All right. And we had agreed that we would begin with appellant's argument, which should not exceed 30 minutes, after which the panel of judges may ask questions. CDTFA would then make its presentation not to exceed 15 minutes, and the panelists could ask questions if they wish. And then we'd allow appellant a 5-minute rebuttal. And I think we're ready to begin. You guys, all parties here have done this before, so the less you hear from me and we jump right to it, the better we are. Go ahead, begin.
I have one housekeeping
Oh, sure.
matter. We brought a demonstrative with us today.
Okay.
And given opposing counsel a copy of that demonstrative. We have copies for each of you as well, and I'll have it here on the easel. I think maybe the department wants to put something in the record with regard to, reliance on the facts. That it's a timeline with all the facts in this particular case, but I'll turn it over to the department if there's an objection.
You are offering it as an exhibit for factual or just for demonstrative illustration for today's purposes? In other words, it's not even going into the evidentiary record?
Correct.
Right, no, we don't object
On
as
that
long
basis.
as, on that basis,
Yeah,
correct.
okay. That's fine.
And if it's all right, if I deliver my argument standing up?
Sure.
Okay.
We try to be informal, but...
Judge Angie, is it okay if I approach with?
Yeah, I think I don't have a problem with that, sure. Thank you.
Okay, good morning, Judge Ajiha, Judge Brown, Judge Rosas. As noted, this is a single-issue case. It's a case that's been bifurcated for issues, only dealing with the jurisdictional issue here of whether or not the OTA has jurisdiction to hear this appeal by Newell. The appellant's position is that, yes, this tribunal does have jurisdiction, and the reason that the OTA has jurisdiction is because there is ineffective service of notice by the department in this matter. And that ineffective service has really two components, one being there was ineffective service to the taxpayer itself, and there was also ineffective service to the taxpayer's representatives. I think it's very helpful because this jurisdictional issue really centers around a discrete period of time to walk through the various facts. So this is why I have the demonstrative that I've put up and have handed out. I'd like to walk through that if I could.
Can everybody hear me okay if I talk from here? Are you good? Okay. So the very first event that we have that takes place is actually in 2015, and this is when we had a POA that was executed by Newell's representatives at the time. There were 2 individuals listed on that POA. After that time, the next key date is when the BOE Form 82 was filed by the taxpayer. This is the form that authorizes email transmission of confidential taxpayer information that would authorize the department to send notices by email.
Let me stop you real quickly. I've just been advised, it's for the video where you're standing when this is live streamed. They can't see you. And is it the live stream mic that won't hear her? Yeah, online they won't hear you at all. So we can still hear you. It makes a presentation, but
All right, I can do this.
the million YouTube followers will not be happy at this moment. Not to interrupt your
No worries,
presentation.
I got this. Is this better?
Is that still on camera? I don't have it pulled up, so I don't know.
On camera doesn't matter. The video is what we check our transcript against at the end of the day, so if we needed to revise the transcript, we would
Okay, got it. I'm going to stay right here. All right, so you have a POA that's issued in 2015, and then you have the BOE Form 82 on the electronic transmission of data filed in November of 2017. The next key date is when the appeals conference, the original appeals conference was held, which was on January 4th, 2018. After that, you have the decision that actually comes out, the original decision and recommendation, that comes out on April 18th. So you have the original decision that comes out on the 18th, and that decision at that time is sent by email to the taxpayer, to the director of Newell, the tax director at Newell, and then it was also sent by U.S. mail to both of the representatives that were listed in the power of attorney. The appeals conference attorney for that decision was Mr. Daniel Cho. At some point after April 18th, Mr. Cho leaves the department. On May 18th, the taxpayer files a timely petition for reconsideration. And I'm going to skip a couple of these dates because I want to follow the train of the events here related to the notice. So, unbeknownst to the taxpayer, Mr. Cho had left and a new attorney had been assigned at the appeals conference level, who was the one who wrote the supplemental decision, Mr. Charles Potter. And when Mr. Potter was done with that decision, he did not serve it by email to the tax director, and he did not send it by U.S. mail or other permissive means of service to either of the representatives, to both of the representatives in the power of attorney. So a period of time goes by from the time the petition for reconsideration is put in May of 2018, and then on November 7th, this is the date of November 9th, 2018. This is when the supplemental decision is issued. The supplemental decision was not sent by email to the taxpayer or the representatives. It was sent by U.S. mail to both the representative at Newell and to only one of the two attorneys in the POA. At that same time, Newell had undergone a reduction in workforce. That was on October 31st of 2018. This was an unexpected RIF, and everybody in the company was impacted, particularly in the tax department. And only a week later, Newell's Atlanta Tax Department's offices were relocated somewhere else. By the time the supplemental decision made it to the tax director at the new location, because of course it went to the old location, there had not been enough time to file a new an updated address. Everything had happened very quickly, and so the time that it gets to the tax director at Newell is on December 10th, 2018. At that same time, the tax director immediately contacted the appeals conference officer, Mr. Potter, to let him know the situation. And there was nothing at that point in time that was shared by Mr. Potter along the lines of, you still have time to file, or, sorry, yes, we didn't email it to you. There was nothing along those lines. So Newell files its appeal with the OTA on December 21st. Now, there are a couple of other key dates on here that I didn't go over yet, but they mostly pertain to the two representatives that were representing Newell at the time. As I noted before, the two representatives both were on the POA, and they were both sent by U.S. mail served copies of the original decision. On the supplemental decision, for whatever reason, it was only sent to one of the two representatives. The representative that it went to was not in the office between the dates of November and December. He was tending to a very ill mother. So had it gone to both representatives, the other representative would have received it timely and would have been able to notify Newell that an appeal needed to be filed. One of the contentions that the department brings up in its brief is that Newell would have had an extra 10 days because of the service rules and the regulations that state that if the notice is mailed by U.S. mail out of state, that there will be a 10-day extension of time. Unfortunately, that rule only exists in the OTA's final regulations. The regulations in effect in December were the emergency regulations, which did not have this rule for purposes of business tax appeals. There was only a rule for franchise tax board appeals. So even at the time, had the tax director, when he reached out to the department to tell the appeals officer, look, I just got this, here are all these things that just happened, even at that point, if there was some notion by the department that there was still time, in fact, 9 more days to be able to file an appeal, you would think that would have been communicated. And even though the rules didn't specify it, I'm confident that my client would have filed an OTA, a protective appeal, just because an attorney had instructed him to. But that never transpired. So we're left with the appeal date of December 21st. As I noted, there were two ways there was ineffective service, both with the taxpayer as well as with the representatives. With the taxpayer, we believe that there was ineffective service because the taxpayer had executed Form BOE 82. This form was filed in November of 2017, and consistent with this filing, the original appeals officer sent the original decision by email to the taxpayer. With the supplemental decision, there seemed to have been a lack of awareness of the BOE Form 82. It is our contention that the regulation on point, it's OTA Regulation 35002I, it's the definition of mail. Mail means by United States Postal Service and by other carriers, and also means electronic transmission such as email. But email containing confidential taxpayer information will be sent by CDTFA only with the taxpayer's written consent. It's the taxpayer's contention that this allows effective service by email via BOE Form 82. The department's unwillingness to acknowledge that a taxpayer's execution of this form requires email transmission for all communications renders meaningless the portion of the regulation that defines mail to include email. Stated a different way, Regulation 35002 subdivision I defines mail to include email, and the only way the department will send a communication via email is if the taxpayer executes Form BOE 82. But if the department is permitted to ignore the existence of a properly executed Form BOE 82 and claim mail by U.S. Postal Service constitutes effective service, then a regulatory definition of mail that includes electronic transmission is rendered meaningless. The second way there was ineffective service goes back to the representatives through the POA. The power of attorney was executed in 2015. The representatives never changed. At the conclusion of the appeals conference and when the decision was issued in April of 2018, the hearing officer sent both representatives by U.S. mail a copy of the decision. When the new appeals conference hearing officer sent the supplemental decision in November of 2018, only one of the representatives in the POA was served a copy by U.S. mail. The other representative was not served a copy. And for the reasons I noted before, that individual was dealing with a seriously ill mother and was not in the office. A lot of times that's why we have two representatives on the POA, is just for these instances where one attorney may be tied up, out, etc. It's always done to be able to prevent this type of situation. And unfortunately, there was no service to the other representative in this case. Finally, Newell contends that in the event that the OTA determines that there has been effective service, it contends that an equitable remedy is required under these circumstances. This OTA, when it was created in 2017, in the enacting legislation, and in addition, the amended legislation that followed on its heels, in Government Code Section 15672, it states that the Office of Tax Appeals is the successor to and is vested with all of the duties, powers, and responsibilities of the State Board of Equalization necessary or appropriate to conduct appeals hearings. There is a long line of BOE case law that allows for the BOE to have been capable of issuing equitable remedies. One of the best decisions on point is appeal of Wickenbach. It's Winkenbach. The case number is 75-SPE-081, dated December 16th, 1975. In relevant part, it states, "It is our opinion that we are bound to apply judicially accepted doctrines." The board in this decision walked through early California case law where there were decisions that stated that administrative agencies that were created by statute, such as the OTA and many other tribunal-type boards and commissions that sit in California, that they were not allowed to handle anything that was for the judiciary, particularly constitutional issues. And that was kind of early up through the late 1950s. And then jurisprudence came out after that in the following decades that said, no, they're recognizing that these agencies exercise quasi-judicial, adjudicatory, or adjudicating power, acknowledging that the only real difference exists in the matter of judicial review. And what was meant there was that at a point in time, you had to file a separate complaint or a separate declaration seeking equitable remedies, and that disappeared as a requirement judicially. And as that disappeared, that was what allowed for boards like the State Board of Equalization to be able to apply equitable remedies. In this case, we believe equitable estoppel is applicable, as well as equitable tolling. In appeal of Western Color Print, Board of Equalization Decision 78-SPE-071, August 15th, 1978, the board laid out 4 elements for the estoppel doctrine. The party to be estopped must be apprised of the facts. Newell apprised the department of the facts. The party must intend that his conduct shall be acted upon, or must so act that the party asserting the estoppel has a right to believe it was so intended. By issuing the supplemental decision on that date in November, there was a clear indication that the statute of limitations began to run from November 7th. Third requirement, the other party must be ignorant of the true state of facts. Newell was not aware of these facts until December 10th, when it received the physical copy of the decision. The last element, the party must rely upon the conduct to his injury. So here's the detrimental reliance. There's a pattern of conduct by the department by sending the email with the original decision, and that timely made it to the taxpayer. And despite the fact that there was a change in hearing officers, the second hearing officer should have known there was a BOE Form 82 on file, and that there was a full anticipation by the taxpayer that it would also receive the supplemental decision by email. So we have detrimental reliance, meeting all 4 elements of estoppel. With regard to equitable tolling, the best decision on point is a California Supreme Court decision. It's McDonald versus Antelope Valley Community College District. That's 45 Cal 4th 88. Decision is from 2008. Stating equitable tolling is a judicially created doctrine that operates independently operates independently of codified statutes of limitations. Under McDonald, equitable tolling is allowed unless the statute clearly states that its list of tolling bases is exhaustive. We do not have that here. There is nothing in the regulation that suggests there's an exhaustive list of what must be done in order to file within the 30-day statute of limitations. Second, either the text of a statute or a manifest legislative policy underlying it cannot be reconciled with permitting equitable tolling. We also have nothing like that applies to the regulations that apply to this case. So in closing, Newell contends that there is ineffective service both to the taxpayer and its representatives, and that in the event that the OTA finds that there was effective service, that it is entitled to equitable relief in this case. Thank you.
All right, thank you. Questions from my panel? Nope. All right. CDTFA, would you like to begin your presentation?
The facts before you are not in dispute. The Appeals Bureau mailed its decision to appellant and its representative on April 18, 2018. And pursuant to a verbal request made at the appeals conference, the appeals attorney sent an electronic copy of the decision to appellant's Director of Indirect Tax, John Goss. Pursuant to appellant's request for reconsideration of the decision, the Appeals Bureau mailed its supplemental decision to appellant and to its representative on November 9, 2018. According to appellant's opening brief, Mr. Goss's office was in the process of relocating at the time the supplemental decision was mailed, causing Mr. Goss to not receive the supplemental decision until December 10, 2018. Appellant filed the appeal at issue with the Office of Tax Appeals 11 days later on December 21, 2018. According to the Office of Tax Appeals rules for tax appeals, found in Regulation 30203, Subdivision B1, a taxpayer has 30 days from the date the Appeals Bureau's decision, including supplemental decisions, are mailed to file an appeal. Accordingly, appellant had until December 9, 2018 to file its appeal. However, appellant did not file its appeal until December 21, 2018. Therefore, pursuant to Regulation 30103, Subdivision B, the appeal is not timely, and the Office of Tax Appeals does not have jurisdiction to hear the appeal. Appellant's argument that the department failed to properly serve the supplemental decision ignores the law. The department's rules for tax appeals in Regulation 35004 states that any notice given by the Appeals Bureau must be served in the manner prescribed by Revenue and Taxation Code Section 6486, which states that a notice of deficiency determination must be mailed to the taxpayer's address as it appears in the records of the department. Regulations 35065 Subdivision E and 35006 Subdivision B3 state that the Appeals Bureau will mail a copy of its decision or supplemental decision to the taxpayer. According to Regulation 35002 Subdivision I, mail means mailing by the United States Postal Service and also means by electronic transmission, but only when a taxpayer has given written consent to transmit its confidential information electronically. There is no dispute that the Appeals Bureau mailed the supplemental decision to appellant's address of record with the department, both to appellant and to its designated representative. We know that the supplemental was only sent to Mr. Schaefer's attention, but we also note that both Mr. Schaefer and Mr. Levinson worked in the same office. It was the same address. So our argument is that taxpayers' representative, PricewaterhouseCoopers, received notice given that it was addressed to the same office. Therefore, the mailing requirements of Section 6486 and Regulations 35002 Subdivision I, 35004, and 35006 have been satisfied. While the Appeals Bureau did not send an electronic version of the supplemental decision, there is no record that appellant requested that the supplemental decision be sent electronically, and appellant does not argue that there was a separate request made. We note that even if appellant had requested an electronic version of the supplemental decision, such a request would not make service by mail invalid. Pursuant to the authorities already discussed, mailing a supplemental decision to a taxpayer's address of record is always sufficient for purposes of serving notice by the Appeals Bureau. Likewise, the BOE 82 form signed by appellant only gives the department authorization to send documents containing confidential taxpayer information electronically. It does not require that the Appeals Bureau or the department send every document electronically. Accordingly, it's the department's position that the appeal filed to the Office of Tax Appeals on December 21st, 2018 was late, and the Office of Tax Appeals must follow its rules, and its rules do not allow the acceptance of a late filed appeal. Regarding the argument about the equitable powers of the Board of Equalization and also the Office of Tax Appeals, the Board of Equalization did not possess equitable powers, despite what they may have decided in some of their cases. And that is all for the department. Thank you.
I'll hold off on asking questions till after the rebuttal. Appellant, would you like to take 5 minutes to rebut what they've said? If you wish. Undisputed facts, we don't need to hear the same thing again, but I want to give you the opportunity.
I only have 2 points that I'd like to raise, and I'll take them in reverse order. The department argues that somehow there needs to be a request for electronic transmission and that there wasn't such a request to send the supplemental decision. I would note that in Form 82, it specifically states that the authorization will remain in effect until rescinded in writing. Everything on this form contains the case identification number, the correct taxpayer fee account number. There is no reason why the appeals hearing officer would not have been aware of this form. In addition, there wasn't another hearing in which Mr. Goss could have made another request. The fact that he made a request and executed the form is what requires the communications to come by email. The second point is the department's reliance on Revenue Tax Code 6486 with regard to how a notice of determination should be served. I want to be clear that 6486 does not apply in this case. What authorizes taxpayers to be able to appeal an appeals board decision, formerly would have been called a decision and recommendation, is now in the government code at 15570.54. This is a statute that authorizes taxpayers to appeal appeals bureau decisions to the OTA. And within the powers that are granted to the OTA with its rulemaking, the only law applicable to the notice requirements are going to be the regulations that have been promulgated by the CDTFA and OTA, which are consistent on the definitions of mail. One last point. Okay. One last point. The department makes the assertion that because the two representatives were in the same office, that even though it was only addressed to one of the representatives, that the other representative should be aware. I want to make sure that it's clear that this wasn't a small office. This was an office of PwC of approximately 200 individuals. So the fact that something came in with somebody's name and went to somebody's desk doesn't mean that someone was aware that it should be copied or given to another representative. So that concludes my rebuttal. Thank you.
All right. Questions from my co-panelists, Ms. Brown?
Not at this time.
I do.
Okay, go ahead.
To respondent. Upon learning from appellant that respondent had failed to email the supplemental decision, were there any follow-up measures that were available to respondent for respondent to take?
As far as email, I'm not sure I understand the question. So after Mr. Goss contacted the appeals attorney, is that what you're referring to?
Correct.
So is I'm sorry, I'm trying to understand the question. The question is, what could have been done at that point in time?
Correct.
Nothing that would have, I mean, he could have sent a copy at that point, but it wouldn't have mattered. There's not really anything that could have happened at that point in time.
Let's speak in generalities. I'd like to get a sense of respondents' practices and procedures. So generally speaking, in situations in which respondent learns that an attempt at notice has actually failed, what are the types of follow-up measures that are generally available to respondent?
When you say that attempt at notice has failed, meaning what exactly?
Answer that however you wish. Just notice failed for whatever reason.
When we issue a notice in their address of record via U.S. mail, we've served notice. Period. Full stop.
Let's say there's a situation where a taxpayer informed respondent of a change of address, but respondent's staff fails to send the notice to the new address, sends it to the old address. In that situation, notice has failed. What are some of the follow-up measures that may be available to respondent?
At that point in time, once they are made aware of it, they would reissue in this case, the supplemental decision, if they had sent it to a wrong address, and assuming that the statute, that the timelines hadn't lapsed, then notice would be given as of the new date of the date of the mailing to the correct address.
This question is going to be directed to both parties in follow-up to what you just said. So under the facts and circumstances of this case, would it have been reasonable for a respondent to reissue the supplemental decision via email and to both attorneys in fact with a new date of issue? Why or why not? And I'll direct first to appellant.
Yes, when the department was made aware on December 10th that the service had been effective, at that point in time, the department should have reissued the supplemental decision. And the reason they should have done that was because they were made aware of the failure to send by electronic transmission the decision, as well as the fact that the decision was not sent to both representatives. In both cases, there was ineffective service. Similar to your example of, taxpayer reports the new address, but somehow it gets overlooked and the notice goes to the old address, that would be ineffective. It's our position that the ineffective service with the lack of email to the tax director of the company, as well as the lack of U.S. postal mail to both representatives, made it ineffective. So when the department was made aware on December 10th, it should have reissued the supplemental decision.
Question to respondent.
In a situation, if we're talking about this situation, the department's position is that service was effective, and so a new or a secondary notice of the supplemental decision would not have been, there would have been no need to mail it a second time.
One more question here. I know we've been discussing effective versus ineffective service. I'd like to ask both parties to discuss whether the manner in which the supplemental decision was served, whether that manner complied with procedural due process. Why or why not? And I'll start with appellant.
Make sure I'm clear on the question. The question is whether or not the department followed the procedures for effective notice.
Trying to take a step back from the discussion of effective versus ineffective and broaden the scope in terms of procedural due process and trying to get a sense of whether there is a procedural due process issue. Maybe not, but I'd like both parties to discuss.
Sure. So the procedural due process failure to the taxpayer in this case was that the real problem here is that there was a change of hearing officers, and the second hearing officer was not diligent in looking to see what was done before with regard to the original decision when it was served. The original decision was served properly in all ways. Procedural due process met. On the supplemental decision, it's lacking in procedural due process because that same pattern of conduct was not followed for the second decision. The taxpayer relied on a form that they filed that allows and, is saying to the department, I want all communications by email, and there's no requirement by regulation that you have to make a continuing request or have to request a copy. The fact that you're filing the form means that you should be getting it by email. Does that mean that you can't also receive it by U.S. postal mail? No. I mean, if they want to send it both ways, that's fine. But in this case, it should have also been sent by email. And I think that is the procedural due process. And then the second piece as well on the service upon the representatives, which is required. They had a power of attorney, and the power of attorney requires that the information be sent to the representatives. So by sending it to only one representative and not the other, now you have a procedural due process problem again because it didn't go to both representatives, which would have prevented this problem as well.
Respondent?
The department does not believe there were any problems with procedural due process. Again, the mailing requirements were satisfied. We'll restate the BOE or CDTFA 82 form, while it does give authorization to the department to send confidential information electronically, it does not require that every single communication with the taxpayer be sent electronically. There's no wording on that form that requires everything to be sent. It is a courtesy that the department extends in situations where a taxpayer would like to receive their information, their documentation, their notices electronically. As for the service to taxpayers' representative. Their taxpayers' representative was PwC, was PricewaterhouseCoopers, and they had two individuals listed on their power of attorney. And while the decision did send a courtesy copy to both representatives to their attention, the supplemental only sent it to the attention of one of them, but again, at the same office. And if Mr. Schaefer was on an extended leave, we would expect that a firm such as PwC would know to direct an email concerning a specific client to all parties involved at that office.
No, I don't think I have any questions.
And I have no questions. If neither parties has anything further to add, that will conclude this hearing.
I make one rebuttal point. It's on the BOA Form 802, or 82. It's difficult for me to understand how a taxpayer or a taxpayer representative would fill out this form and not have an anticipation that everything moving forward in that case would come via email. Having been someone who has practiced before the State Board of Equalization with sales and use tax cases for over 20 years, anytime I have had this form filled out, which is the majority of my cases, I receive everything by email. And I do not think that it's unusual that a taxpayer would rely on this type of form and believe that everything would be sent by email.
Before I close it, I did have one actual question, and I think it's a minor point, but you're reminding me. CDTFA is not taking the position, although I heard you say it, are you still taking the position that a new BOE 82 form has to be filled out with every SDNR, right?
No,
Not unlike a resale certificate, it's valid until revoked.
Correct.
So notwithstanding all the rest of the arguments that we've heard, the one that they provided on 11/27/17 would have been sufficient for any and all emails from here to eternity.
Correct.
Okay. I just wanted to nail that one shut. Okay, I have no other questions. If the parties are good, then at this point, I will close the record and conclude the hearing. I want to thank each party for coming in today. Following this hearing, my co-panelists and I will discuss the evidence and argument, and we will issue a written opinion within 100 days. Thank you, everybody, for coming.
Thank you very much.
That'll do.